Are you aware of the various components of your payslip? Let's take a look at each of these aspects and analyze them. What constitutes the net pay? Your payslip consists of two essential categories, earnings and deductions. So your net pay is the difference between the earnings and deductions. What constitutes the earnings? The basic salary, the Dns allowance, house rent allowance, leave travel allowance, leave encashment, bonus or variable pay, other allowances, and even reimbursements. The basic pay or basic salary is the starting block for any payslip. It constitutes a major chunk of the total earnings. It also influences the HRA and other retirement savings. Most often, the HRA is a percentage of the basic salary. It is hence said that pay cuts done through the reduction in basic salary is not a wise idea, as it not only influences other components of the salary but also your long-term and retirement benefits. Let's look at some of the allowances that are mentioned in the payslip. The DNS allowance or DA is often adjusted periodically, taking the inflation indices into consideration. But employers can pay the DA as a fixed amount as well. The DA forms at least 10% of the total earnings. Both the DA and the basic pay influence certain components of the cost to company. These include the Employee Provident Fund or the EPF and gratuity. Reducing the DA as part of the pay cuts is not advisable, as this will impact other benefits as well. The HRA often constitutes about 10 to 15% of the total earnings. Now, unlike the basic salary and the DNS allowance, the HRA is a tax-efficient income for employees staying in rented houses. The leave travel allowance is also a tax-efficient allowance. It is often given to employees to defray travel costs on domestic vacations incurred by the employee and the family. This can be paid by the employer annually or monthly. Leave encashment means that employers allow employees to encash a portion, say about 15 days, of their unutilized privilege leave, also known as earned leave, every year. However, leave encashment at retirement has tax breaks. Your employer may have also agreed to pay you a bonus or variable pay depending upon your performance as well as the performance of the business. This will reflect in the earnings as and when the amount is paid. The amount can either be paid in parts or in a single installment and is fully taxable. There are also allowances that do not have tax breaks but are mentioned in the payslip. These include medical allowances, transport allowances, vehicle allowances, as well as other special and personal allowances. There are also allowances with tax breaks that are mentioned in the payslip. These include the children's education allowance as well as hostel expenditure allowance.
Apart from these, there are also reimbursements for expenses incurred for official purposes. For example, some companies reimburse telephone expenses. These are tax exempt if permitted by the tax laws.
In addition to these cash components, the employer may provide non-cash perquisites, also known as perks. Some of these perks include a concessional accommodation and even a vehicle for usage. These are not reflected in the payslip but are part of the cost to company provided by the employer. Some perquisites, like food vouchers, are tax efficient. Do you know the difference between the cost to company and the net pay? The cost to company is a pre-tax amount while the net pay is a post-tax amount. But did you know that taxes form a part of your deductions in the payslip? In the next episode, we will look deeper into the nitty-gritties related to the deductions mentioned in your payslip.